Let's now move to the markets in Nigeria. Gains by non-financial stocks extended the stock market's rally for a second consecutive day this week. The NSE All Share Index rose about 0.5% to 38,255 points. The bourse was lifted by gains in Nestle Nigeria, Dangote Cement, UAC, Oando, and Transcorp. Meanwhile, losers included MRS, GlaxoSmithKline, Conoil, Mobil Oil, and CAP. Kayode Tinue, Strategy and Business Officer at Diamond Bank, joins me now for a review of the trading day. Thank you so much, Kayode, for joining us. So, Kayode, are you surprised that the market is moving higher? It's extended the recent gains today. It's up another 0.5%. We know one of the drivers has been the likes of Transcorp, one of the best performers in this quarter.
Well, Wale, I'm not really surprised that the market is gaining some momentum in recent times. I sense that there is a lift in market sentiment, particularly when you look at the results, the third quarter earnings results that we've seen come through in the market in the last 3 weeks to 1 month. I think there is a lot of stability, even though some companies fell short of expectation. But on a general note, I think those results were impressive, and I think that is what is driving the market. And again, when you look at the stability that we've seen from global economy in terms of inflows from foreign investors have been really, really stable, and that's telling on the market at the moment.
All right, so you're not surprised. I think some people will argue, though, that many of those results were already priced into many share prices, and it's really more of a speculative rally, particularly with companies like Transcorp, Forte Oil. It's gone up about 1,000% this year.
Well, I do not share that view. I think the market is really fundamentally strong at the moment. When you look at, you will say some companies have had some challenges, especially the banking sector, with respect to some of the regulatory changes we've seen in that sector. But I think on a general note, we've seen some strong valuations coming through, and I think that is really sustainable. I do not think it's speculative at the moment.
All right, but if we look at some numbers coming out today, Guinness, like I mentioned earlier, reported a 3.3% decline in first quarter earnings per share to 1.16 kobo. So that is a sector that a lot of people have identified as being slightly overpriced. Now we're seeing weak numbers coming out of Guinness. What we've seen up to now from the likes of Nigerian breweries as well have not been too exciting. So your take on these numbers?
Well, fundamentally speaking, I think the industry at the moment is really facing some challenges in terms of volume growth. When you look at discretionary spending in the consumer space, it's really not encouraging at the moment. And a lot of these players are facing challenges in terms of growing their top line. We saw Nigerian breweries grow their turnover in Q3 just about 5%, and Guinness is coming with a drop in revenue. The sector is really struggling to find its in terms of satisfying the much needed consumer demand.
Right. So what's your outlook for the sector? I mean, is this a sector you think investors should be putting money in? Do you see a turnaround anytime soon? A lot of people have highlighted that the Nigeria consumer's pocket is under pressure. It has been under pressure really pretty much since January 2012 when we saw that hike in fuel prices.
Well, I think the outlook for the sector is promising. When you look at the fact that Nigeria is about the biggest consumer market in Africa, and most of those consumer names really will continue to excite investors going forward. I think some of the challenges that the brewers have faced is in terms of really controlling the operating cost as far as inputs are concerned. Some of them, like Guinness and Nigerian breweries, the big players, have really tried to domesticate their input sources. Not much success has been achieved in that regard, and that is telling on them. If you look at Guinness, for instance, in terms of finance cost, there is a lot of pressure coming from that item in the company's books, and really telling on their performance, and that's one of the key drivers of these Q1 results that we've seen. Again, Guinness looks... Hello?
Yeah, go ahead. Go ahead, make your point.
Oh, yeah, can you hear me?
Yes, I can hear you. Go ahead and finish your point.
Okay, fine. Guinness, as we all know, operates in the premium segment of the market. It has really struggled to grow in that space where we have a lot of demand coming from the lower middle tier segment of the market. It's very weak in the lager segment of the market, and it's really trying, as much as increase in capacity, it has done a lot of increase in capacity in recent times, but it has not really gained enough traction in that middle market segment of the industry, and that's really telling on its performance at the moment.
Well, I guess bright spot clearly has been the GDP numbers, up to 6.8% in Q3. And what do you think this means for the market going into next year? To what extent do you think this is going to reflect on the corporate performances going forward?
Well, I think the numbers we've seen in terms of GDP growth, for me, reflect more seasonal factors rather than structural. We saw GDP grow by about 6.8% compared to 6.1%. You know, in the third quarter of the year, we usually see an increase in the level of activities, particularly government spending, as we wrap up the fiscal year. I mean, that is really what you would notice in terms of expenditure coming into the economy and driving prices of goods and services. But I do think also that we've seen some gains, some marginal increases in oil output. Recall that in the second quarter of this year, we've struggled to maintain an average of 1.9 to 2 billion barrels of oil trade on a daily basis. But we've seen some marginal increases in Q3, going up to about 2.2 to 2.3 billion. And that's reflecting in the growth rate of the oil sector, even though we still had a decline. But I think there is some improvement in that sector. And again, the agricultural sector really is driving the non-oil sector as we speak. The reforms that we've seen coming through in that sector in the last couple of months, going up to a year now, is really beginning to show in the numbers that we've seen. So I think next year we'll likely see an increase in this momentum, even though you will say it's an election year. Some of real spending in the economy may be under pressure as political spending takes the center stage. But I think fundamentally speaking, we still should expect a good year next year.